right, so we have our spring insurance price set in here. We're looking at 470 for the corn market. We're looking at 1054 here on soybeans. We're going to show you a table here on the different revenue protection coverage levels and what that might mean for what your actual trigger price is as it relates to your own APH. Keep in mind everything we're discussing is for education and example purposes. If you have any questions, feel free to let us know. Make sure you understand and know your own risk tolerance as we go through the information. We have here in front of us right now, we'll take a quick look at that weekly front month corn chart. In the white line across the board there, you've got a 470. That's your spring insurance price. Now, the key important level to keep in mind, though, is if you just have a 75% revenue protection policy, your trigger price on an indemnity payment at APH, at your APH, it doesn't actually kick in until about 352 on the board. That's quite a discrepancy, and we feel like guys really need to know where these levels are at. Here's your table showing the different coverage levels at APH. Again, 85% coverage, you're looking at a $4 board price. In order to trigger a payment, if you jump down to 70%, you're looking at a $329 board price. As we go over to the bean side, here's that weekly front month soybean chart. Again, we've got the white line going across showing that spring price that we just set in here at 1054. However, same with corn. If you're carrying a 75% revenue policy, your effective trigger price at your APH level doesn't actually occur until 790 on the board. Same table here, we just wanted to put it up for soybeans. Again, 85% coverage at APH, trigger price is at 896 on the board. If we jump down to 70%, you're looking at 738. As we look to wrap things up in here, guys, it's just really important to know what your coverage levels are. Obviously, we have that spring insurance price, but then we have to take into consideration what the actual coverage level is. You can use your APH to kind of see where your payments will be. Now, obviously, yield will make a difference. If you have a higher yield, it's going to lower your trigger price. And if your yield is lower than APH, obviously your trigger price will end up coming up. Lastly, we just want to remind guys, insurance provides confidence to sell ahead. That's what it's there for. We want to protect value. That's something we always try and bring to the table. Sell into strength, reward rallies, have some orders working above the market at either some resistance levels or levels that make sense for your operation to lock in a profit and protect some of the value out there. If you have a problem, as long as you're selling only up to your insured bushels, your insurance can kick in. And then when we look at these sales, don't forget to diversify sales. This is something we talk about all the time. We typically like a third strategy, right? So do your first third in a cash HTA or sell the board outright. Then consider some option positions to give yourself a little more flexibility. And then lastly, keep in mind those do nothing bushels. We've been talking to guys about recently in here is another way to think of that is how much of your potential inventory do you want to have open for a major crop scare or weather issue or crop failure, however you want to put it. For some guys, they might want to have 50% of their potential inventory out there. For other guys, they might only want 25% of this upcoming crop. So that's the kind of risk levels that you guys got to consider and look at when you're making some of these sales decisions. But at the end of the day, our philosophy is always to sell when you want to, not when you have to. Try and keep yourself in the driver's seat, keep the markets in front of you as we go through this year. If you guys have any questions, as always, feel free to reach out to us. Make sure you guys hit the like button, hit the subscribe button, and we always enjoy making this content for you.